Most traders are still chasing candles and levels, but the market has evolved. It's time to see how capital actually moves, not how charts pretend to move. Welcome to EMAMA, the terminal that turns market chaos into clarity. Textbooks will tell you it's all about supply and demand, patterns, levels, crowd psychology. That model might have worked 30 years ago. Today, it's just a playground for algorithms. Our perspective is simple. The market is managed. Price action is engineered to redistribute capital from the predictable to the prepared. At the top, you have funds and algorithmic pools. Below them, early insiders. Then, market makers who execute and exploit. And at the bottom, retail, providing the liquidity. Nearly every move you see is just market makers versus retail, operating within a larger vector set by capital. They engineer a pump, induce FOMO, collect liquidity at the top, then engineer a dump, induce panic, collect liquidity at the bottom. Price goes where the liquidity is, not where a line on a chart says it should. This is why static support and resistance is a trap. So if we don't track price, what do we measure? Not a secret, deviation from the average. The EMA is our axis, validated against tens of millions of scenarios. We track three things: energy, structure, and timing, not pretty candlesticks. The Birch Matrix is your aerial view. Each row is a time frame. Each cell is 1 minute. Light cell means, at this minute, the market was above its moving average on that exact time frames. Dark means it was below. When you see the lower time frames flip in sync, the market is changing direction. A DP, or average deviation power, measures how far the market is straying from its average. Above zero, capital is flowing in. Below zero, capital is flowing out. The zero line represents a balance. Extreme readings burn out fast. Higher highs on ADP confirm the trend's strength. A failure to make a new high? That means momentum is fading. Trend dominance shows you how many assets are actually participating. Above 80%, that's a strong market-wide bullish sentiment. Below 20% is a strong bearish narrative. But if ADP spikes while trend dominance barely moves, that's a red flag. It means a few heavyweights are dragging the market up, while everything else is weak. Together, these modules turn price action into market physiology. You see its energy, its timing, and its breadth. You stop reacting to candles and start reading intent. First, build logical asset lists. Add your first core timeframes, from 1 minute up to 1 day, and load enough history to see the full context. This foundation is what makes every other tool meaningful. The screener instantly ranks your assets by 2 key metrics: deviation, DP, and duration, DUR. Deviation power finds the most charged or drained assets. Duration shows how stable that move is. By combining them, you can catch moves that are both strong and persistent on any time frame. Here are 3 quick use cases. Alerts only. Use it for alerts. Set triggers for ADP extremes or a trend dominance flip. Stop watching charts all day. Let the terminal ping you when a high probability setup appears. Position and swing. Use it for swing trading. Watch the 4-hour or daily charts to read the risk-on or risk-off sentiment. Then act when the Birch Matrix confirms the shift. Screener first. Use it as a hunter. Filter with the screener and trade only the strongest leaders or weakest laggards. Keep your focus tight. Discipline isn't optional, it's a feature. Set daily loss caps, trade limits, and enforce stop losses. You can even enable supervisor mode, which requires approval to change your safeguards. This module alone can transform your results. Train before you trade. Our demo mode is a full fidelity simulator. Same tools, zero risk. Build and validate your process here. And finally, measure your performance. The analytics panel breaks down your stats, efficiency, and risk profile with metrics like the Kelly criterion and ECR. So you don't just know that you're profitable, you know why. Stop guessing, start observing, Build your lists, set your time frames, and configure your first alerts. It's time to let the market show you its true intent.